All right, so today we're still going to continue with the topic of SMT divergence. SMT, let me just put the capital, SMT divergence. It's like that. Now, we already had some explanations about this, but I'm still going to maybe refresh your minds with it now. SMT divergence is it's one of the tools I use mainly for confirmation, or to guess the strength of a particular asset, because for me I use it based on strength. Okay, like for example, when you're trading two assets, when you're trading Euro USD, okay, when you're trading Euro USD, what you're actually doing is you are trading the strength of Euro against the strength of the USD. Okay, that's simply what you're doing now. If Euro is going to be stronger than DXY, then or than US dollar, what should happen is that the trend of Euro USD, okay, the market of Euro USD is going to be pushing higher, or the chart is going to be pushing higher. But now, if the dollar is going to be stronger than Euro, if the dollar is stronger than Euro at the current moment, then the chart is going to be pushing to the downside. All right. So when you see Euro USD pushing down, automatically know that what DXY is stronger than Euro at that time. And if you go to the chart of DXY alone, if you go to the USD index alone, you're going to notice that it is pushing higher. That's why Euro USD is negatively correlated with DXY. Okay. Now, talking about divergence, when you're trading divergence, what you're simply doing is you want to benefit from two assets that are correlated, either negatively or positively. Positively means they move in the same direction. Okay, like Euro USD and GBP USD, they move in the same direction, but now their correlation percentage is not so high sometimes, because what Euro USD might be pushing higher and GU might not be pushing higher that much. Now, for you to do that, you can just come to compare. All right, on Euro USD here, you click the compare button, and you can put in the asset you want to compare with here. Let's first of all start with GBP USD. Okay, you can just take new price scale, I think. Okay. Now, I've taken new price scale, and it has added a price scale for GU on my left. Now, you can adjust it to, let's use the candle. Okay. Now, if you look at this chart right now on my screen, you're going to notice that this is GU down, and then this is Euro USD up. Okay. Now, sometimes if we go back in time, you're going to notice that there will be some times where Euro USD or GBP USD is doing something different, and GU is not doing the same thing. All right, let's just try to look for an instance like that. Let's look for an instance like that. Let's just say from this point here, from this point, you can notice that as of this level, okay, so this level, you can see this push to the upside by GU, but when you see Euro USD was not willing to actually push higher. And then when you see the way GU, all right, GU took out this high, then look at Euro USD, barely not taking out the high, and that's why we see this kind of a fall. So sometimes, though they are positively correlated, which means they are supposed to be moving somehow together, but sometimes they don't really move 100%. That's because their correlation percentage is not that high. All right. That's why sometimes GU can make a low and Euro USD will not make that same low. Okay, sometimes GU will make a low and Euro USD will not create the same low. I want to just point out an example for us where Euro USD makes a low or a high, and then GU does not do the same. Like for example here, you can see that at this point, Euro USD took out this high, and then this is the same high on GU, and it did not take out this high. Okay, so this is what we actually call SMT, because with these assets, they are positively correlated, which means if Euro USD is taking down this high, GU should actually do the same. Okay, why are they even positively correlated? It is because both of them have the USD All right, both of them have the USD as a code currency, and the strength of the USD is actually much that they can influence the actions of all these assets. Okay, now let's go back to the correlation itself. Remember, I said understanding SMT. Understanding SMT, you have to first of all know about correlation, because you will not want to look for an SMT between assets that are not correlated. Let's say, for example, you open Euro USD and you want to compare it with gold, and you're expecting to see an SMT. No, they don't correlate that much, and your SMT would likely not hold. Now, what about having an SMT with DXY, and you know that DXY is it's positively or negatively correlated with Euro USD, and the correlation percentage is really high. Okay, the correlation percentage is quite high because DXY tends to do exactly the opposite of what Euro USD is doing most of the time. It will do exactly the opposite of what Euro USD is doing most of the time. Let's try to find out here. Okay, even based, let's try to find out if we want to see this one, our drawings. All right, so we have Euro USD with black, and then we have DXY with red. So you can actually see how they are correlated. And now this was an SMT divergence here. This was an SMT. You see, DXY took out this high, and instead of Euro USD to also take out its low, it failed to do so. And that's why we have been seeing some bullish price movement on Euro USD. Okay. Now this is going to help you, especially if you're trading Euro USD. You always want to check DXY and then understand what is happening. Good. Now at this point, what I mentioned is that earlier, that when you are trading SMT, what you are doing is you are trading the strength of these assets. Okay, you are trading the strength of this asset. Now, tell me, if Euro USD fails to take a low, what does that tell you? What bell does that ring? It shows that Euro USD is gaining more strength. If not, it would have been dropping more, right? So when it fails to take out that low, it actually tells you that, okay, it's gaining more strength and it should definitely want to move higher. Then in this case, the fact that DXY took out this high doesn't mean that it is because it is powerful. The simple thing here is that it was doing a stop hunt, okay? It was doing a stop hunt to then drop lower. That's the purpose of this push above this high. Now, when an asset fails to make a low or fails to make a high, if let's look for a situation where DXY or Euro USD fails to check out a high or low. Let's see if we're going to have any situation like that. It's SMT actually happens very rarely on Euro USD and DXY because they are very, very much positively correlated. Okay? Their correlation percentage is very, very high. I think it's very, very high. And also, some of the assets that have correlation percentage, that is very high is US 100 and US 500. But US 100 and US 500 most of the time have SMT, especially during session openings and other, especially during sessions. Okay, we'll also talk about that. Especially during sessions, you can have lots of SMT. Now, let's look at this particular price action here. Okay, now DXY was pushing higher, DXY was pushing higher, and Euro USD was pushing down. Now, after they created this low, this is this low, and then this is the same high. Now you notice that Euro USD went higher, came down a little bit, and DXY did what? It also came down when Euro was going up, and then as DXY was going back up, Euro was also going back down. Now you see the manner, the height at which these pullbacks happened. You will notice that DXY almost took out this high, okay? and then you see how far Euro USD left that high. Okay, you see how far Euro USD left its own low. Now, this is already telling you that something is wrong somewhere here. And also, this is a hidden swing high here. All right, this is a hidden swing high, and this is the same swing high here. So you will notice that there is also already a hidden SMT here. Okay, this swing high and then this one. Euro USD DXY took out this high and then Euro failed to do this. Now, when Euro is failing to make a low, like I just mentioned, it shows that it's strong, and whatever is happening on the opposite asset, if it's trying to push higher, then that is a sign of a stop hunt. Now, you don't just, this doesn't happen and then you just start saying that, okay, maybe you start selling, you start buying immediately on this candle. No, you have to wait for confirmation, maybe candle closure before you start. Like, for example, when this happens, you should actually wait for price to close below this candle, confirming it to be a order block first before you can think of trading to the opposite side. All right, you don't just see a candle and then you just assume that this is no. You always have to wait for confirmation, because even though prices, let me actually illustrate that with a marker. Okay, we can have DXY create a high like that, and then you have Euro USD fail to create a low like this. Okay, Euro USD will fail to create a low, and then no, I don't think this is correct. This one creates a high, then this one creates a low. Okay, we pull back, and then as this comes down, it doesn't create a lower low, but meanwhile DXY creates a higher high. All right, now the fact that this guy has not created a lower low doesn't just mean that that's SMT. Okay, it could play around here and then do what? Still drop, and then this guy will play around here and still continue higher. Okay, that's why you need confirmation here. You need a reversal confirmation on this move to prove to you that this is actually strength, or this is actually the reason why this guy wants to start pushing higher. For some people, they will actually wait for this break of structure, which is very important, unless you see a powerful candle reversal signal here. Okay, if you have a candle powerful reversal signal here, it's also good. You can choose it to be to use it as your reversal confirmation for the SMT. All right, now let's look for some examples. Now, also you can use this SMT for your direction, which is especially if it happens on the higher time frame. Like currently, this moment, the last price action that we had on DX on Euro USD, you can notice that we had that SMT here, right? We had this SMT, and seeing because of that SMT, Euro USD, which is in black, has been pushing higher. All right, but DXY is not really pushing that low that much. Okay, because if you see here, you will notice that this high has already been taken out on Euro USD, but the same low on DXY has not yet been taken out. That is the effect of SMT. Why? Because this guy was showing it's more stronger now than DXY. If DXY was also was too weak, like it was supposed to be, it should have been taken out this low already. So the fact that DXY also is trying to actually took out this high shows that it's not too weak somehow, but it was actually a stop hunt. But though it's not that weak, but as it confirms for all that it wants to sell, the sell will not be as fast as this one, because this guy showed us that it's more stronger, right? So now when you have an SMT like this, you prefer to trade the asset that is showing more strength. Okay, the asset that is showing more strength, or the asset that fails to make a high or a low. All right, the asset that fails to make a high or a low is going to move to your target very fast. Let's open US 100 and US 500, and then we'll do some comparison with it. Let's see. Let's compare it with US 500 request scale. Now this is very important. Okay, how to put in these two together is also very important. If you have a paid trading view, you can put them side by side, and it will also be very easy for you. All right, so here we have DXY, US 100 and Let me even go right down to the long-term things. We have US 100 and we have US 500. Now, these two assets are positively correlated, like they move hand in hand, positively correlated. Okay, they move like brother and sister. The other one, they don't leave each other side. Now, most of the times, there's a lot of SMT that happens, especially with these two guys, and it's always very, very effective, very, very effective. Like for example, this is already one, and this you can see that price did not take out this high on the US 100, and on US 500 we took out that high. So what do you do next? The next thing is that you do what you look for your confirmation. You look for your confirmation, your reversal confirmation, and then you get your short. It is that simple, right? So remember I said when you're looking for your reversal signal, it's not preferable to trade this one. It's better to trade this asset because it is going to be to move more. It's going to move to your target faster because it's the one proving weakness. Okay, and then this one as well, we had that confirmation too. So let's see if we have another. So at this point, this was already entry confirmation from here. After price close below that up push candle, you would have had your entry like that, and then you target sell side liquidity, or even this one right here. Okay, based on your higher time frame price movements. Now let's try to see if we're going to see any other SMT, maybe for bullishness. Okay, let's see. What this here. Now, when you're trading and you are comparing, or you know that these two assets like this, they always move together, it'll be very easy for you to quickly check out, especially during session trading, that, oh, okay, we have an SMT here. This is likely what is going to happen next. And here, price almost took that high, but here we did not, right? So there was some kind of hidden SMT price almost did that. If you go to the line chart, which sometimes I do as well, you would have noticed that this line chart will be down here like this. Okay. And yeah. Anyway, not to stress, let's see if we have, I want us to have another very clean SMT for. Okay, let me use, let's go down again to the 50 minutes, and then I want to talk about the session. Okay, if you have, maybe you have Lux Argo sessions, you can just put it on. And then this, when it happens based on sessions, it's mostly during London session and the New York session, especially during New York session. Most of the times you'll have SMTs within that period, especially during New York sessions, most of the times. Okay. Let's see if we'll have any example. Good. This is an example here. Okay. This is an example. Now, if you just look, this is New York session. All right. And we have price creating a low and then taking out that low. We have the same low here and price failing to take out the same low. So this is what? This is an SMT. It's an SMT. It wasn't supposed, price was supposed to at least be the same, okay? The same and the same like that, but it did not happen. And this was a failure. This was a failure swing. And now you will notice something here. Look at what I've been explaining. see how fast US 500 pushed to the upside. You can see how fast that happened because what? It was US 500 that was proving to be more stronger. So you could have your entry from that other block. And if you wanted to have traded this guy, you would have had your entry at least from that zone. But the asset which brought us, or which was showing us that it has more strength, is the best one to trade. Okay, it's always the best one to trade. Let's see if we'll have any other SMT. There is 1 year already. I've seen another 1 year. Let's see this one. We have another SMT here. Okay. Now look at this one now. This is good. You see, during New York session, price took out this high. Okay. Price took out that high on New York session, and the same high that was taken out on US 100, US 500 failed to do that, and then it created a lower low. So what does that mean? Which one do you choose to trade? You trade the US 500, okay? Because the fact that it's showing more weakness shows that it's likely to drop more. Remember, I said you trade the asset. You trade the asset that fails to break or to make a swing low. All right, you trade the other fails to make to create a swing low, to create a new high or low. It's very important. It's very, very important. Okay. Now, the fact that this guy created a high, this was just a typical stop hunt that was happening here. Believe me, price would have taken out people from this high, and then because of that SMT now, you wait for your confirmation. The moment price closes like that, you could have engaged for trade on this same candle here, and then you bring it down. Okay, if you wanted to trade this one alone, then you can trade after seeing that displacement to the downside. But you will notice that this guy has not been dropping as fast as this one. Okay, see the dip of the length, it was not that smooth, because this guy, though they are proven to have an SMT, the movement is not very. It created this high because it was showing some strength, though it was a manipulation, but still, it was showing that it's not too weak like this man. That's why the drop is not that much. Now, you are not just going to go to your charts and then you just start looking for price failing to create some lows on other assets and stuff like that. No, that's not what you're going to do. What you have to do is, first, you start on your higher time frame. Okay, you start from the higher time frame. You analyze the market first. Okay, you analyze the market first. All right, before, if there is a reason now for you to sell, like for example here, you can see actually that price did what we had a clear shift in market structure, a clear bearish push to the downside here, and price left us with this swing high, which is an inducement. Okay, we have that swing high, which is an inducement high. All right, now I have to explain that you need to understand, if price wants to sell off, it needs if the market really wants to sell, it needs buyers, right? It needs buyers. And technically, when you place your, let's say for example, you use this other block to sell, okay, what you are actually doing here is that you are selling here, and your stop loss, which is above that high, is actually what? A buy order. Okay, is actually a buy order. So your stop loss above this high, your stop loss above this high, your stop loss above this high is a buy order that you're selling here, right? So it means that you sold something around 25, you're selling US 100 at 25, okay, 25K, and what you are saying is that if price wants to keep going higher instead of selling, as you pointed out, then you want to buy it back at about 27. Okay, let's just say 27K. So what is going to happen is that you're selling something cheap and you're buying it high. That's the reason why you're going to make a loss. And now what is the logic behind the manipulation from the institutions is that they will want to bring price to a place where you're going to sell off your position, to where you're going to buy from them now at a more higher price. So you sold early, but now you're buying high. So you give them the opportunity to sell to you at a higher price. Right? So when they sell to you now at a higher price is willing to go lower. Okay. They do all this to actually bring you into the market to a position where you have to give out your position. You have to sell off your position, or you buy anyone. Like for example, let's say for example, in a case of a buy, right? Now, in a case of a buy, let's say you had found one other block here around here on the 4-hour time frame, and then you place your buy like that. Place your buy somewhere like that. So you place your buy around that zone, and you put your stop loss below that low. Okay. Now, fortunately, we're gonna always have a key level slightly below that low, right? Something like that. Let's say think about that other block or this breaker here. This breaker block, you can see slightly below that low. Now, what is happening here is that you bought something here, okay? You bought here, and your stop loss here is actually a sell order. You're selling what you bought. Now, let's say you bought NASDAQ at 24K, right? You bought NASDAQ at 24K. And what your stop loss is indirectly saying that if it wants to drop to 21K, you should sell off the position, right? You should sell off what you bought. So you bought something at 24K, and then you are selling it back at 21. So you are already making a loss of 3K. And what happens? What is the logic here? The logic here is simple, that the institutions want you to sell off the position that you had here for them at a cheaper price. So they are willing to wait and then buy what you are selling at a cheaper price. Okay, they are going to push price to an extent that you sell off what you had. Okay, maybe because of uncertainty, you feel like price could drop more down. So maybe you start what you bought at 24, you might now want to sell it at 10. So because of uncertainty, now you sell it off to them at a cheaper price than how you bought it. Okay, then you know that when it comes to trading, you buy low, right? You buy low, you buy something cheap, and then you sell it high. That's why they will prefer to buy something low. Okay, they'll buy to you low, which is because of this low, because it's not saying that buying something low does not mean that it must be at some low point. It is low because of this low, right? And in this case here, this one is high. This point is high to sell because of this high, all right? Because there's no way this low is lower than this one. So if you were comparing this one with this one, you will think that you are still buying high. So you are buying here at a lower price based on this low, okay? Because this is where you want people are selling off their positions, and the institutions have to buy from them there. And it's the same thing here. People are buying something that is sold cheap. It's just like you go to the market, you bought a laptop 400K, you reach the house, you are selling it back at 300K. It doesn't make sense. You're going to be making a loss already. Or now you sold it at 300K, which is like selling it from this other block, and then afterwards you want to buy it back at 400K, the same thing. So you are still going to be making a loss, right? That's just the logic here. So when you understand first your direction, now the next important tool that you can use to be able to compare that will help you or increase your probability of the trade is check the asset you are trading to see if there is any check the correlated assets that you are trading to see if there's any SMT divergence. Okay, so if you are trading Euro USD and then you have a reason to sell, or let's say for example you have a reason to buy. Let's say this was a CRT here, okay? This was a CRT here, and then you want to buy. It is just normal that you do what? You try to compare with DXY and then see if you're going to have any reason to have whether you have any SMT. Okay, if you have an SMT, it will be very good. You can use that SMT now to do what? To increase the odds, or to increase the, let me see, yes, we'll use this. You will use that SMT to increase the probability of your trade. Okay, it's very, very important. Let's quickly check if we had any reason to. Okay, that's the low and the high of that CRT. I think this is the area, and then this is the low of the CRT here. This was where price took out the low of the CRT, and looking at DXY, we will now be looking at the high. Okay, we'll be looking at the high on DXY, which should be this same high. This is the high on DXY. Price also took out the high on DXY, just like it took. No, this is the low. Yeah. Let's look at this together, guys. We have this low, so this is the high here. Now you're going to notice something here. This is the low of DX. This is the low of that candle, the CRT candle, and this is the same high here. Well, let's go to the daily time frame and then mark them out together. Let's look at the CRT candles. Okay, we have okay. Now you will notice that this was a CRT, this is a CRT low. Price took it out, and then here as well. Okay, so actually on DXY, price did not actually take out the CRT high. Okay, price did not actually take out the CRT high. I think it did. I think it did. Yeah, I think it did. It did. And there was probably an SMT, I guess, around the zone. Okay, let's go back to around 15 minutes. Maybe we'll see if we can have any SMT around that zone. Okay. Okay, so this is the area we are looking for sales, and then price takes out this low. Okay, and then this is the same high here. We also took out the high. Okay, now at this point actually we did not have any SMT because I was thinking that maybe price took out this high, which it also did not take out the low on Euro USD. So in this case we do not have any special SMT to confirm or to give us a reason to support our trade idea. But around this area here, we had an SMT right here. So this is it. Price did not take out the high there. So anyway, what I'm simply saying is you just look for SMT to be able to add more confluence to your trade and increase the probability after you have already found out the direction of price and every other thing. All right. So let me know. Let me have your questions on the group. I think our session is over. So let's communicate on the WhatsApp group, and then I'll get your worries from there. We'll answer them.